The iShares Silver Trust, SLV, is back in the spotlight as price swings accelerate, with many traders pointing to a series of CME margin requirement hikes as a key driver. These increases raise the amounts of collateral traders must post to hold silver futures positions, which in practice can squeeze out leveraged longs and trigger forced liquidations. Plenty of voices in the community see this as more than just risk management. They argue it's a deliberate effort to cap prices and cool speculation at a time when silver demand is surging. Despite the turbulence, bulls are leaning in hard. Dip buying has been aggressive, backed by the belief that strong physical demand, the potential impact of Chinese export restrictions, and long term structural deficits will eventually overpower any short term price suppression. Even after the recent reversal, silver is still up more than 150% year to date, a massive move that reflects what many see as a potent combination of tightening supply, speculative momentum, and a growing appreciation for silver's industrial importance, from solar panels to electric vehicles. China has been a huge part of the story. Local buying has exploded, with trading on the Shanghai Gold Exchange's silver contract surging through December. That wave of demand drove Chinese silver premiums to record highs and helped drag global benchmarks higher. Speculative fever got so intense that China's only pure play silver fund actually stopped accepting new investors last week after repeated risk warnings and stricter trading measures failed to dampen enthusiasm, much of it amplified by social media hype and retail participation. At the same time, investment demand outside China has steadily strengthened. According to Bloomberg estimates, holdings in physical backed silver ETFs have risen by more than 150 million ounces this year, with net inflows recorded in nearly every month. While total ETF holdings still sit below the peak reached during the 2021 retail driven frenzy, the renewed accumulation has further tightened the market, especially as industrial users continue to compete for finite supply. All of this has turned SLV into a high conviction battleground. Supporters argue that silver is in the early stages of a structural re rating driven by real world scarcity and growing industrial use. Skeptics caution that the market remains vulnerable to sharp corrections as speculative froth unwinds. But one thing is clear: between policy shifts, investor flows, and global demand dynamics, silver's next chapter is unlikely to be boring.
Okay, going by what we have here on its daily charts, that's SLV's daily chart. Underlying trend is strongly bullish. Let's see now, is expected to continue to weaken, or rather contract. This contraction playing out now, the one that started on the 31st. Yes, that was, 31st. Today is 1st of January 2026. Is expected to remain in place up to Monday, the 5th of January. Then after that, the uptrend is expected to remain in place going all the way towards the end of January. Let's see what the projections are saying. Let's see 56, not into the upside, 56.09. But we could also have a look at its weekly chart. Let's see what we have at its weekly chart. Let's see. We might find some projections here on the weekly chart. Its contraction is expected going all the way towards early February. Then after that, it's expected to pick up strength again up till the end of March. Okay, so we'll see how all of this will pan out. We don't have any projections here, nothing to the upside on the weekly chart. The good thing about silver and gold, some of these commodities, they have been around for decades, for decades. So their date, they extrapolations can be can be good. They're a lot better than you know your average blue chip stock. In terms, I mean, the extrapolations are a lot better because there's a lot of data. They've been around for a long time. So here we have on the 4 hour chart, projections are saying, extrapolation is saying that the trend is going to be, it's going to resume the uptrend. Okay, with volatility. especially up till the 12th of January. Okay, so in the very short term, it's expected by tomorrow, the 2nd of January, pre-market session, you may have had a bounce, but after that, it may contract, and then going all the way towards Monday, the 5th of January. Then after that, it may attempt to resume the uptrend, but it's there's no indication that it will retest the highs of 69.89 printed on the 30th of December. And indeed, it's 52-week high of 71.66. It printed on the 26th of December as well. We haven't seen any projections here. 66.46. Yeah, okay, it is a projection. It is an upper projection currently. But if we don't have to see any, we have them here. We have the rejections at 69.89 and 71.66. Yeah, okay. We may just have a look and see. We may have intraday highs on this daily chart if it's going to come up. Yes, it looks like it's 73.22. This printed on the 28th. So yeah, we can hold that 73.22. We could also have a look at these minute charts. We might find some projections here. So we are looking for some anything higher than 73.22. No. 65, nothing here. 73.22. No. Okay, let's come down to the 2 minute chart. Let's see what we have here. 66.22. Yeah, okay. Yeah, and we're not seeing anything yet. 3 minute chart. No, nothing here. Let's see if we're going to get lucky here. 67, no. Well, it's been a long time that happened, so there might be some projection somewhere. But in any case, we take 73.22. Okay, so see what you make of SLV, and thank you very much for watching this video.